The AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ. Good morning. How are you doing?
I'm doing well. How are you doing, Sip?
I'm doing well. Today is March 22nd.
I can't believe it's almost the end of the quarter.
The end of the quarter is what I was going to say. A lot of companies are trying to close the quarter out strong. We had a big Fed meeting this week. A lot of earnings numbers, a lot of lawsuits, got an IPO. I feel like we got a lot going on in the market. AJ, what's kind of capturing your attention this week?
I mean, all of that.
Yep, we lost you there on the audio. All right. While AJ gets that fixed, I think what he was going to mention was some of the things that we've got brewing. Let me go ahead and share my screen. I know we mentioned the U.S. Justice Department suing Apple. We've also had the Reddit IPO. I think we might have AJ back. AJ, are you back?
Yeah, so definitely Department of Justice suing Apple. I think that's going to kind of distract Apple for the next couple of weeks, if not months, if not years. I mean, do you remember the last time a company got attacked by the Department of Justice? That was Microsoft, and it put them back almost a decade. And it's a similar charge, right? It's about monopolies and doing practices that keep competition down. It really distracted Microsoft 25 years ago. It looks like it's going to distract Apple for some time.
And that news came out yesterday or Wednesday.
Yeah,
But
something like that.
the big news this week was, basically Jerome Powell, right, saying that they're still going to lower rates, just not as quickly.
I mean, he didn't even say that. He's, already here. Let's take a look at what investors think. So we've been reviewing this every time we have our show. This is the Chicago Mercantile Exchange's FedWatch tool. And so, as expected, the Fed did nothing as far as policy changes this week. In May, you can see that the investors expect not much to happen as well. They expect the Fed to basically be on hold. But then in June, investors are starting to expect, and this is a little bit higher. If we take a look over here, the numbers last week were at 55%. The week before, or a month ago, they were at 52%. So now we're coming up to about 2/3 of investors are really on board with a 1/4 point rate hike in June. And, the Fed hinted at 3 rate hikes. About a month ago, people were thinking there'd be 4. We'd be dropping interest rates by a point. The Fed's been resetting expectations to more like 3/4 of a point. But yeah, if you come all the way up to November, that's when we expect those 3/4 of a point to be locked in. There's a lot of ambiguity about whether that last rate drop will be in November or December. But June definitely looks like the first one. Maybe July will be on hold. September, the second one. And that's what we would expect. And this is kind of that soft landing that we keep questioning whether the Fed can do, but they seem to be doing. Growth, he went up in his rhetoric and said that growth would continue to happen. So being able to calm inflation and at the same time keep growth happening, I mean, this is the Goldilocks situation. And investors look back at the S&P 500, like I've got up on the screen right now. Investors, got it very excited on Tuesday, got even more excited on Wednesday. Then on Thursday, the after hours traders and the pre-session traders were excited, but now we're starting to see a little bit of kind of weakness going on yesterday and today. So we'll talk about that more during our special, the topic of the day. But definitely wondering if that good news has come and gone, and now that it's in the rearview mirror, more of kind of reality is setting in again. So that's kind of the stuff that's happening. It doesn't also, we had if I take a look over here at our economic news, one of the sticking points across the board has been housing, right? The US, we basically took about 10, 15 years off of building houses. And so now, no matter what we talk about with inflation, there's always going to be this thing about not enough houses for the people out there. And so housing prices here in the States are quite high just because they haven't been building houses, right? And so it's good that on Tuesday we saw housing starts. First of all, we had this expectation for starts and permits. The difference is of course, starts is when they actually dig into the ground and start building stuff, whereas permits is when they go to the counties and they get the permits to start building. So both of these numbers came in much higher than expected, right? And in addition, the January numbers were revised higher. So this is a good trend, and this should be putting some of the economists who make decisions around policy changes in our economy at more of an ease. And then if you take a look at what we got on Thursday with our existing home sales, that too was quite warm. And so this is basically saying that, hey, they're building houses, people are feeling comfortable moving. So all of this is just, it's all great news.
And it seems as if what you just indicated leans more towards residential. And I don't know if you've seen any of the rhetoric around commercial, but I feel like a lot of the chatter around commercial has still been fairly negative. But you're right. It is good to see the residential because housing is a big question mark across,
And I got to say, there's been a growing, excitement around converting office buildings into condos, and that has also helped. There's a company out of LA that is just going nationwide called Vivo, VIVO, and I suggest people, Google them, kind of get up to speed on Vivo. They're buying up big commercial properties and turning them successfully into condos. In fact, we've got one in Baltimore that I'm actually personally involved in different ways. And I was helping Vivo, get a hold of this. It was actually a Holiday Inn Select. It was a huge hotel in Baltimore that pretty much Holiday Inn, people nowadays when they're going on trips, not as much popularity with the big hotels like there was back in the 70s, 80s. Now it seems to be people like Holiday Inn Expresses, those full service, cheap economy, give me a bed, give me a morning breakfast, and I'm out, right? And so the Holiday Inn Selects have not been as popular. The Hyatts have not been as popular. And in Baltimore, that's an interesting, we don't have to talk about that, but that's an interesting place altogether. But Vivo came in, bought this huge hotel, and they've already got something like 75% of it sold, and they're still working on the condos themselves. So they're pre-sales. So there's that movement in the commercial to residential, anything to build up the residential real estate market.
Yeah. We need housing in America. I did want to ask if you had any thoughts or if we could just pull up Reddit. Reddit went public yesterday. And I guess my question for any of the, for me and any of the viewers is, because they just IPO'd yesterday, when do options become available? What do you like? How does an options trader approach IPOs?
So what is the ticker? Do you know off the top of your head?
Oh goodness.
Here, let's just Google it. They would come available pretty much day RDDT, day one. So when a company decides to go public, they decide right then and there if they want to be optionable. I don't see that they have any options. Now we'll go and check back over the next month. Sometimes there's a paperwork thing going on, but usually they've got their ducks in a row. And if it's optionable, it's going to be optional on day one. But we'll keep checking back on that to see if it becomes optionable over the next couple of weeks. But it would be pretty close to the beginning, if not
And
at the beginning.
so it IPO'd at 31, and then it looks like it peaked yesterday at like 58 or something.
Yeah, and I think that they were expecting it to be just around where it is right now, $48. So they were bringing it in at 31, but they expected a lot of buyers. It's going to be interesting to watch Reddit. Now it's in the news, right? So it's not something I want to be thinking about selling premium on. Also, I like to see some history on a stock before I start, but it doesn't hurt to follow this because this is kind of an interesting, especially cocktail party discussion one, because Reddit is got its own kind of personality. You've got your Snapchats, you've got your Metas, you've got your Alphabets, otherwise known as Google, right? And they've all got their own kind of way that they go to. Pinterest is one of the ones that we follow here. They've got their own demographic. And I don't know if you probably pay attention more than I do, but boy, the Redditors, a lot of them have been so anti going public.
Well, I'm not surprised because most of them are anti-establishment, which is
It's
why
true.
the platform thrives. But the interesting note that I got out of some of the chatter on Reddit was that they were really pushing AI initiatives, right? Like
Yeah.
their revenue model is similar to, the social medias, but as an advertiser myself, I'm never thinking like, hey, I need to go advertise on Reddit because that's where conversions are, right? Like, so they were pushing this as an AI play more than anything, which is not surprising, right? Because that's kind of the topic of the season.
Hmm.
So, we'll see. But I'm kind of in the same boat as you, where once numbers come out next quarter, I don't know where the money's coming from, but we certainly love the platform. So could be one of those Snapchat stories where they like had a lot of users, went public, and then everyone stopped using the platform.
We'll see, because they've been really pushing their users to become investors, right? That's been successful for Apple and Tesla and Amazon to get their users to actually be profit sharers by becoming investors. But I'm not sure the Reddit users, I think the Reddit users are dividing into two groups. And one group is pro IPO, one's against it. But the ones against it, I mean, they are quite verbal. I mean, there's Reddit users that I have, not stalked, but dropped in and kind of I've been a voyeur on conversations, and they're so even anti the folks that manage those forums, right? These guys are just really interesting people to. You have to, when you read something in Reddit, you almost have to put your own filters on to get some information on. So it's going to be interesting, like you said, to watch. But I don't think I'm going to be an investor in the Reddit stock, at least not anytime soon.
I mean, they went up to like $5 or $8 billion market cap. So like, compared to their revenue and non-existent profit, we'll see. All
The
right.
other one, we got to also mention Nordstrom and Macy's, right? Because Nordstrom is looking, they're in there shopping for a leveraged buyout, right? So that could mean going public. It could be a merger acquisition. They did this back in 2017. They were, and they actually turned down a $9 billion offer for the company back in 2017. Well, they're back at it again. There's all this paper trail of how they're courting Morgan Stanley to look for a potential buyer. And Macy's has been doing that as well. So the retail world, as we know, is kind of changing. A lot of people are doing stuff online. Nordstrom has, a ton of debt right now, like in the 2 point something billion dollars worth of debt. So if they got a buyout for 3.2, a lot of it would go for that debt or whatever they could get a buyout for. But the only part of Nordstrom that's really doing well, especially now that even our top end buyers are watching their P's and Q's, um, is Nordstrom Rack. So a lot of these off Fifth for Saks Fifth Avenue. Saks Fifth Avenue, actually, one of those companies in kind of the same family as Nordstrom, was successful at getting a buyout from a Canadian company called Hudson Bay Outfitters, right? That's the current owner of Saks Fifth Avenue. And they're now a private company. And so we'll see what happens with Nordstrom and Macy's and in that whole retail space. But if you look at Nordstrom stock, which we have been following, JWN, you can see that, they were trading down at 13, 14, 15, and they've been as high as 22 since all this kind of rumor. They're now about, a third of the price higher because of this expectation that they may be acquired or bought out and brought private.
All right, we'll keep an eye on that. We'll be sure to add it to the watch
Do you
list.
see the drop in Bitcoin prices?
Well, I mean, it keeps hitting highs and then pulling back, right? So higher highs or higher lows.
Yeah, well, yeah, basically. But take a look at this chart. I'll just show you, not bonds, crypto, Bitcoin. So they were trading up at 68,000. Now they're at 64,000. I mean, cryptos are just crazy volatile. Trading as high as, if we go, I guess we're looking at a 1 year. Let's look at a 3-month chart so we
That
get a
was
little
the
bit.
high. It was like 70 something.
74, 73,000, but now they're down to 63,000. So that's going to be interesting to watch as well. Still a space that I'm not sure I understand because it's kind of like vaporware to me, but cool, isn't it?
Yeah, the halving is coming up, which I don't really know the technicals, but I know that it is basically what the Fed does, right? Where it
Yeah.
shreds money, so it technically there's less available and
Yep.
becomes more valuable. So
Yep.
yeah, I mean, I do a little bit of crypto. It's not going anywhere, so definitely have the wallets in case anybody wants to send me a couple Bitcoins. I'll go ahead and give you the wallet because
Should we look at the S&P and also look at the VIX charts, see what we've got?
Yeah, I mean, I was gonna, promote the show or promote the webinar.
Yeah, do
And then
that.
let's promote the webinar. Let's take a break. We'll get into the charts, which we could segue into our topic of the day a little bit.
I love it.
And then we'll get AJ's pick of the week and some of our speed rounds. So anybody watching, listening, tuning in for the first time, AJ's got an awesome free daily workshop where he breaks down some of these amazing strategies on premium selling and using options as an investment tool. As the headline says, generate some serious income like a monthly paycheck, period. Those are kind of the ways that the strategies are built, so it feels like it's a monthly paycheck. So we're going to go ahead and take a little bit of a break here. The link to that is in the chat, so head on over and grab that. We'll be back. If anybody watching has a specific name that you want us to run through, throw it in the chat, and if we have time, we'll jump in there. Otherwise, we'll come back, talk a little bit of SP, VIX, AJ's pick of the week, and some speed rounds. So sit tight. We'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So all-time highs this week again, AJ, right? So looking at the S&P, I mean, what do they call that? A pyramid or a flag is getting tighter and tighter. What's that formation of the two blue lines?
That's called coming into a pivot point or coming into a consolidation point.
It's getting tighter and tighter, it looks like.
Yeah. It sure is. Let me see if I can pull this down. Yeah, it's getting tighter and tighter. What's interesting though is we had such strong price action on Monday and on Tuesday, right? And then on Wednesday we gapped up. And so what's interesting about this is with those two, bullish candles, you might call them, or these two, up bars, you might be, tempted that, hey, this is a strong market. Usually 3 up bars in a row is a signal. And so how could we know that maybe there is some weakness? And so I wanted to turn our viewers on to some indicators. Now, the indicators that I'm going to show you guys, probably, let's start with the RSI, right? One of my favorite indicators, been around for forever. I'm going to turn my RSI on here. Traditionally, the RSI is smoothed out over 14 periods, so 14 bars. But basically what the RSI does is it looks back at the last however many number of bars, and again, the most popular is 14. It looks at those last bars and it kind of makes a ratio between the gainers and the losers, right? So if there's a losing bar, it groups them together. If it's a gaining bar, it groups them together. It figures out the average of losses and gains, makes a ratio so that you have this number between 0 and 100, right, on the RSI. And you can see here, I've got my scale. It's showing how on the S&P, the RSI has been living higher than the middle line. I've got some lines here. In fact, I can adjust those lines. Traditionally, these reference lines are at 30% and at 70%. It's considered a momentum indicator because it is comparing gains versus losses. But for us, what it can do is if we pay attention to, especially, this is a live bar. This is today's bar. And because we're in the middle of the trading session, it's moving around. Now, it's moving around kind of not as much as it has been moving around on previous days. But if you watch it very carefully over our show here, if we were to leave this on in the background, you'd see that closing price moving up and down on the daily bar. If we were to look, for instance, at a 15-minute chart, and I'm bringing that up right now, you'd see even more activity as each 15-minute bar lines up. Coming back to the daily chart, that means that this RSI line from yesterday's previous close is going to be flapping like a dog's tail, right? It's going to be going up and down depending on what today's price action is compared to the last, in this case, 14 bars. With respect to, is today a gaining day or a losing day? So that can give us some ideas if we watch the RSI on each day, especially that live tail on the daily chart, whether it's pointing up or down. That can give us some insight as to whether there's some hidden weakness or hidden strength. In the case of, should we jump in on the third bar? If you see the RSI flat or even tilting down, that's giving us some hidden ideas that maybe this rally is a temporary in response to kind of the Fed news and the Fed rhetoric, rather than, something with some strength and momentum in it. So I wanted to turn people onto the RSI. And then there's 2 other indicators. And I look at these 3 indicators that I'm going to give you, RSI being number 1, kind of in parallel at the same time. So the other one, so I just switched over to the SPY, right? This is the ETF that perfectly mirrors the S&P 500. And this has a volume measurement, as you can see here. So I want to add 2 more indicators here, and I'll show you where on Thursday I got kind of a red flag about the current uptrend. So I'm going to add on balance volume, and I'm going to add accumulation distribution with respect to volume. Now, these two indicators are very close to each other. They basically take price action, what is the price action, and they multiply it by the amount of volume so that you kind of have, if there's no volume that day, then you won't get as significant a move in the on balance volume and the accumulation. Whereas if you have a lot of volume, which usually means that traders are validating the price move, then you'll get a bigger move in the on balance volume and the accumulation distribution with respect to volume indicators, these two down here. But here's the scoop. And you might say, well, if they do the same thing, why would you have them both? Because they look at price differently, right? The on balance volume looks at price with respect to the previous day close. So in other words, the on balance volume takes into consideration your after hours and your pre-session traders. Whereas the accumulation distribution takes into consideration the full-time traders that are there during the proper trading session only. So they go and calculate what the price action is from open to close. So again, looking at that live tail on Thursday, here was Wednesday's close on both of these. And on Thursday, the on balance volume, and actually I think I got that right. On balance volume from the previous day close shows that everything's good to go. Even the RSI showed that there was momentum, although it was a little bit more on the flat side. But my accumulation distribution with respect to volume said that the traders of the day were calling this a tired or a weak move, right? And so unless all three of these agree and say things are strong, or if you're looking on a certain day to short the market, meaning you want to see weakness, unless they agree, I might raise a red flag and not place my trade for the day, because these guys are looking kind of at the hidden underpinnings, not just at price. So a lot of times, especially beginner traders, just look at price and they're like, oh, price is going up, price is going up, price is going up. But when you start to factor in momentum in the case of RSI, as well as volume weighted price, that the individual traders, the ones that matter, the after hours traders versus the session traders, you might get a whole different insight. So I always make sure that in addition to the price action being what I want to see, that I also see, the RSI on balance volume and accumulation. And that's why I knew that Thursday and then today even more, we've got some weakness telling me that the draw up on Tuesday and Wednesday might be short-lived.
And would you follow this up at all with looking at the VIX? Because I know we were going to pull it up, but is that an extra tool that kind of, hey, if the VIX is increasing, then the insurance buying is increasing?
Sure. So same thing. We saw the VIX drop on Tuesday and Wednesday. So all of a sudden there was this false sense of confidence, right? And so then we definitely are seeing price patterns in the VIX, and you can apply these indexes to the VIX. You have to read them a little bit differently than to market prices, because the VIX measures something else. But I can also just use regular price patterns. So on Thursday, you see this thing that we call a upside down Lincoln's hat, right? Because it looks like Lincoln's stovepipe hat, President Lincoln's stovepipe hat upside down. And what it basically says is, hey, the bears, meaning the people who were saying that the market is super confident, were by the end of the day reversed by the people who say, wait, we should have a little bit more fear in the market. So indeed, just with the S&P kind of losing strength, we can look over here in the VIX and see that people are starting to say, hey, I actually still have a little bit of fear in the market. And by the way, we've talked on this show about how we could use the VIX as a hedging trade. This is the perfect time today, maybe Monday at the latest, to apply the next hedging trade. The last hedging trade that we had actually produced even better than expected gains. We talk about in our hedging trade how if you let it go to expiration, you'll at least cover the trade, but you don't have to let it go to expiration. If you see it top out and start to go down, no matter what signal you're using, you can see we had one of our indicator signals right here. You can go ahead and liquidate it early and take some gains. And we actually took, a nice set of gains, 2 or 3%, which isn't bad for the VIX. That VIX trade is meant specifically for if all of a sudden there's a jump in fear in the market, that VIX trade will go to like 50%, double your money, 100% returns. But you could even, roll out that trade at a nice little profit and then get ready to reset it, because now's the time to reset it. So there's a lot of cool things happening in the market. And if you're tuned into these underpinnings, you'll be able to take action rather than always just looking at what the price is doing, because the price can be misleading.
All right. In summary, that's a breakdown of how AJ looks at on balance volume, accumulation, distribution volume, and RSI to kind of determine strength or weakness in the market. And following this week's action, we're seeing a little bit of weakness. So great time to be getting involved in any premium selling, any options trading. If it's a tool that you're not already utilizing, well, thank you for joining us here, because that's what AJ's specialty is. And we got a couple examples that we'll go through. So I don't know if there's anything else that you want to run into, AJ. If we don't have anything else to cover, I think the folks are ready for your pick of the week.
Yeah. I mean, I do want to let people know, speaking of all these indicators, today's been a pretty heavy indicator discussion, that if you have free access to our web portal or paid access, if you're one of our program participants, go check the bonus downloads. These are available to everybody. We upgraded and updated our free indicators this week. We actually, we only had one up till this week. Now we have 4 different free indicators that you can download. You should go update your indicators, because some of these ones we've actually put a lot of R&D into them, putting in some neat filters. And you can see I use these indicators on a daily basis. I'm not just making them in order to, give something to it's not a freebie here. These are things that I actually use. So I recommend to all of you to go download those indicators, because I'm going to be using those on analyzing my pick of the week and analyzing your speed round picks.
Yeah, and the link to that is in the chat. So head on over there, sign up, and you'll be given the instructions on how to get that loaded up. With that being said, I think we've got a good one this week. So AJ's pick of the week this week is a name that we've covered a few times in the past, a popular name in the investing world, I think, over time, and that is Kinder Morgan, ticker symbol KMI. What's the scoop here? What's the play? Why do you like it, AJ?
Well, I always like Kinder Morgan because Kinder Morgan is a staple. It's a company that is, profitable, a good run business, and it's freaking boring, which means I can use my option trading strategies on this guy. I'm resetting my charts here so we can pull it up. We can use our trading strategies on Kinder Morgan and really get out of it a very good income stream using options. And I want to remind everybody, because this is something that even my most experienced program participants, when we talked about this week in our special webinars that we do just for program participants, they forget sometimes that the success of technical indicators at giving us trade signals is built on kind of the premise that what has happened in the past will happen in the future. But if a symbol or a company that backs this trading symbol is in mainstream media, or it doesn't make gains, or for some reason it's a stock traded that has some volatility that's unexpected, your technical indicators are going to give you bullshit, signals. And pardon my language, but you can't trust the signals. And if you do trust the signals, you're totally setting yourself up for big failure, right? So we like these companies that are reliable, boring, not having all sorts of outside influences, that the past price action and past volume action represents what we can expect in the future. It's just super reliable. And I love putting my money into things that are reliably going to pay me return. So once I find one of these reliable companies, man, I'm just going to keep putting my dollars into it and letting that basically ATM machine keep paying me dollars. So what I wanted to highlight about Kinder Morgan is we got ourselves a signal for selling. And so what does that mean? That means I can either sell positions that I'm already in, I can short some positions, or I can use some option strategies like puts. I want to, at this point, when I get a signal like this, I want to get rid of calls and I want to stock up on puts. And depending on the strategy I'm doing, I'll want to use different exercise dates and different strike prices. Now, I got this signal, and this was a signal on March 13th, and it kind of played out a little bit on March 14th. And now we've got this kind of reversal signal, which gives us a double top. It gives us an opportunity to do more, to dollar cost average. So I'm raising this to everybody who missed this past signal, because you're going to get a second chance. And so I'm looking here. I'm waiting for my next magenta arrow to appear. I'll be looking for this only in the evenings. So every evening I'll check in on this stock. When I get my magenta arrow, that signals me to look the next day to place the trade. And I'm looking for either to, if I've got some long trades in place, I'm looking to close those out. If I've got some short trades in place, I'm looking to add more. And if I don't have any trade in place, then I'm either going to be looking at shorting this symbol, and it's not cheap, but it's not super expensive. It's trading around $18 right now, and there are substitute options. So if you're not able to short, maybe you don't have $18, you got to have it in lots of 100. So we're talking about $1,800 per, contract. If you don't have that, then we can perhaps go and let's look at the January 25 leap. A leap is an option that expires on the third Friday of January. So we're looking at the leap for 2025, and we could go, somewhat deeper in the money, maybe looking at this $8. So instead of spending $18 a share, we're looking at spending $10 a share. So you can include some leverage and have something that works with you, right? So January 2025 put, plus that's a cash trade, which means you don't need a margin account. You don't need any special account. In order to short stock, you need to have a special account with your broker. In order to buy puts, you just need a normal cash account. Nothing special there. So I'm looking to either short the stock or buy some substitute option puts. If I'm in a long trade that I established back in February, I'm looking to go ahead and either sell call premium or just sell my underlying symbol to begin with. This is going to be a signal where I can do some maintenance adjustments to my trades, no matter where they are.
Yeah, and if that overall market top serves to be true, that probably would fuel a position like you just described here to
True.
pull. So AJ pick of the week, Kinder Morgan, ticker symbol KMI, add it to the watch list. And go ahead and download that free indicator, because you can see how easy it is to just look for the red arrow or magenta arrow and the blue arrow and get a little bit of insight on the trends. So the link to that, once again, is in the chat. Head on over there, download it. It has been awesome to see as we do our analysis. All right. Before we head on over to our speed round, I do want to invite everybody to show us some love. Head on over to that like, to that follow, to that subscribe button. Tap it, share it, tell your family and friends. Throw some tickers in the chat too. You know, we're an open road show here where AJ will run through some names and see if there's opportunity. Otherwise, we do have some good ones from throughout the week from people all across the world at this point, really. And we've got some names that people want your take on, AJ. So let's go ahead and start it off with David out of Santa Fe, New Mexico, interested in Array Technologies, ticker symbol ARRY.
Okay. Array Technologies. I think we looked at this once before, like a while ago. This is a company that specializes in the actual mechanical panel things for solar panels. Like they make those things that track the sun and keep the solar panel at the perfect angle with the sun. You know, Array Technologies, let me look back a year here at some of the price action. They've lost a tiny bit of their luster, it looks like. They were trading up here somewhere between the $18 and even $24, maybe as high as $26 range. Lately, they're trading down here at about the $12 at its low, maybe $16 range. I actually can tell when I apply my best fit trend line here that they're in a little bit of a downtrend. Let's zoom back into the more recent price action. So yeah, if you're in a downtrend, what we kind of like to do is look for these moments where we're at the top of the downtrend. So for instance, if I go ahead and draw my support and resistance lines, and I usually just make a parallel line to my best fit trend line, my linear regression line, and then move those to where I can hit as many closing prices and as many opening prices as possible. So there, and then I'll duplicate it and I'll do one down here. Something like that. It doesn't have to be 100% perfect because obviously support and resistance is subjective anyway, but you can kind of get an idea of where the majority of price action is staying in between. So when you have something that overall is moving down, the best place to get into a trade is when it's charging up to go down and down. You know, this is the tide and these are the waves. And so you want to be catching a wave that's going in the same direction as the tide. And so I have a feeling the reason why you brought this up is because you see that it's possible that we're about to get a signal to head down. And I think you're absolutely right. I would wait for that signal. I would wait, in our case, you know, use our indicator, wait for a nice purple magenta arrow. That would be a nice signal that you've got that lagging indicator kicking in, telling us that, yep, we're about to head down. And then, yeah, exactly what we were talking about with Kinder Morgan. You have a couple of options here with options. One option is to use the stock itself and short it, and I would definitely short it in lots of 100. The other thing that I would do is buy that substitute put option, and let's see if they even, we haven't looked at the option chain. So again, I'd probably go out all the way to the January leap, and I see them. This thing's trading every $2.50. Yeah, maybe I would go and use this $5 leap, get me a little bit of a discount. But actually, I'm looking at the call. I meant to be looking at the put. And I think on Kinder Morgan, I you know, by default, I go to the left side of the screen. I should be looking at the right side of the screen. With the put, we want to go deeper in the money, maybe use something like this $25 or even this $22.50 put option. That would be the substitute. In fact, I kind of want to go back to Kinder Morgan. We'll do that at the end and make sure we recommend a good substitute on the put side, because I think I was looking backwards. But I would do something like that. I would buy that put option. What price are we looking at? We're looking at, if If I use the 2250, I'm looking at about $940 per contract. So that's not bad. You buy that put option, and then that put option will appreciate, and you can extrapolate down and give yourself, targets at when you're going to buy you can either sell the put option, or you could buy protective calls and write some near term at the money put options. When you have something that's trending rather than going sideways, just expect to get less on your premium trades every month, because that initial covering position is appreciating with the actual long-term movement of the stock. So lower your expectations of monthly income, but raise your expectations for money on the back end, and you'll be happy. I like that. I like this. I think you wait for the signal and you take action.
There you go. Seems like short opportunities are a theme this week.
Yeah.
So thank you for that, David. Let's move on to our next name. This is Nancy out of Lincoln, Nebraska, interested in Conagra Brands, ticker symbol CAG. Big food company, right?
Yeah, defensive play for sure, right? Because food is always going to be a business. And Conagra, I mean, if you look at the back of your food packages, you'll find that Conagra is one of the big companies that produces especially things like frozen vegetables and frozen foods. So cool. This thing is probably ripe for our premium selling. It looks like it's trading. Let me go back. I always like to take a step back and look at the longer price action. Yeah, it looks like it's been trading in this like range from about $27 all the way up to about $30, something like that, since October. I mean, it was trading much higher, and that had a lot to do with some of the inflationary prices of food. But food, even though we're all still complaining that food is more expensive than it was, it's kind of balanced out in the last few months at the grocery store. We don't see those prices going up as crazy as they were. And so, yeah, I see that we're coming towards the top. So again, I do the same thing. If you have a long position on Conagra, I would wait for a valid signal, and I would then sell some call premium and buy some protective puts. If you're not long, then do the opposite trade. Short some Conagra or buy some protective puts. I mean, not protective puts, buy some put substitute options, and then be prepared to sell your puts at the bottom. So basically, in summary, right, whenever you're finding your bottom reversals, that's when you buy stock or buy call options and you sell your put options. Whenever you're at the top, this is when you short stock, buy put options, and sell call options. So it's as easy as that. Now, which options you choose to buy and sell, what strike prices, what expiration dates, that's when kind of the elegance of the trade comes in. But in just simplified terms, that's how you trade sideways channeling stocks.
Yeah, and that one looks like it's gonna be like it doesn't like what would need to happen for them to fluctuate a lot, right? Like their business is so stable, right?
Yeah.
That they're not, unless they come up with some sort of way to create food, right?
The scoop is that food, it's definitely subsidized by governments around the world to make sure that people eat. And so brands like Conagra have the benefit of the stability of always having customers with money, whether it be their money or food stamp money or, whatever. So there's always going to be a stable market for food products. And that's where investors, when they're worried about some of their more speculative plays, you'll see money flow into here. But otherwise, sideways movements the way it goes.
Yeah, that's one of those maybe long-term portfolio holds, just because of that sustainability. All right, thank you for that, Nancy. Moving on to our third and final name in our speed round. This is Sarah from Albany, New York. Interesting name for this company, Corning, ticker symbol GLW. What's the backstory with these guys?
I mean, Corningware, fiber optic, anything having to do with glass is what Corning is all about. Let's take a look at the chart because I'm seeing some interesting consolidation, right? I'm not seeing fluctuations between a couple prices. I'm seeing consolidation on the $33, maybe $32.75 mark here, right? So if I zoom in again, like I like to do after I zoom out, I always like to know what's happening. I'm seeing, this ascending level of support going towards this horizontal line of resistance. When I see these consolidation patterns, these converging channels, I think to myself that there's something going on. And so what you need to do, Sarah, is you need to check the news to see if there's something going on with Corning. So, you go to like Yahoo Finance and you type in the ticker symbol, and then you can look at news headlines. You don't even have to read the news articles. You can actually go through the news headlines. You can sort them from the most recent and work your way back and see if there's some ongoing theme that might be pointing towards why investors are kind of stalling, waiting on the sidelines. They're like this. I can imagine them doing something like this, like, should I buy or should I sell? Let's see, right? And so I'm seeing this consolidation. We don't want to sell premium on this because the premium trades that we're talking about always are based on what we call range bound patterns. So long as the pattern stays within a certain range, we profit on the time passing by of options. But if there's consolidation and you've got those investors standing by waiting to jump on any sort of, scheduled news event or unscheduled news event, that could send price down or up. And we usually don't have any sort of hint unless we have insider information at which way it'll go. The thing that we can be confident about is that when you see consolidation, that generally that consolidation is going to end. And so I don't want to get into any premium trades for that reason. But if I can get some insight through some sleuthing, this would be what I would do with a breakout trade. We've got breakout strategies I've been talking about for the last 15 years, whether they be active or passive. With options, you can do passive. You can trade, usually with the consolidation of a stock, you can see the option prices start to go up because people are going to start, buying options as hedges against surprise price action moves. So you'll see the options and you can profit on that options. If you become a seller of options now and the price goes up on the expectation of a move, you can actually buy and sell before even that move happens and make money on just that increase in confusion and uncertainty that approaches as we get to the consolidation. You can profit. The only thing you don't want to try to do is profit on time passing by because we don't have a predictable pattern here. Instead, either profit on the movement of the price or profit on the fear, the increase in uncertainty that comes right before the movement of the price. This is cool. I'm glad that you pointed this one out to us.
Yeah. Go ahead and do some sleuthing through the news to see if something's on the horizon. Do you want to run through KMI real quick just to see?
Yeah, let's go back because I think I gave some bunk information. I was looking for a substitute option and I was over here on the call side. Let's look over here on the put side. Percent extrinsic. I love this. By the way, this percent extrinsic column that you see here, this is in our indicator package. And it makes picking the options so much nicer. So if you haven't downloaded our free indicator, you should do that because you can get this percent extrinsic column, and you can basically look anything around the 5% or less mark is the option you might be interested in. So looking at the 22 or even the 25 might be the better number for us. These options might be the ones to use as a substitute. So instead of spending $18, I could spend $4.18 or $6.60. And these would be cash trades, whereas shorting the stocks would be a margin trade. So you get two benefits, right? Sticking with cash, which is never a bad thing, and then getting the leveraged price, the cheaper price.
All right, that's the follow-up on KMI. If you're wondering, once again, how to get access to that lovely indicator, the link to that is in our scroll bar. It's also in the chat. A lot of great tools there, as you can see, very useful in our analysis. All right, AJ, I think heading into the end of the first quarter, is that something that you think has a sway on the market, on fund dollars, anything of that sort?
I think right now the market seems to be all focused on, talk about inflation and some of the more popular headlines. I don't think people really register end of quarter until earnings season really gets into full swing. So, I kind of think of the end of the quarter like I can't believe. Uh, I feel like we just started 2024 and we're about to end the first quarter of 2024. I can't believe how fast time is passing. But other than that, I think people are going to be focused on, especially these big names, Nvidia, Tesla, Amazon, Google, what's happening with Apple and the DOJ suit, Microsoft with their, partnership with OpenAI. I think AI is going to play that big piece. And as far as our trading, I'm still going to look out for those stocks like Kinder Morgan that are predictable, reliable, and just ongoing sources of cash that I don't have to put a lot of effort into adjusting the trade. Maybe one or two adjustments a month, paying, the same thing that a mutual fund would pay per year, I can be making per month. Those are the ones I'm going to be searching out, Sib.
Yeah, and although we do cover some of the headlines, it's more to get a take on the topic when it comes to actually putting the money behind the moves. It's these boring names, and they're not as appealing, not as sexy, but they get the job done. And you've been doing this with trading for over 20 years now, so boring is the name of the game, but it also keeps you in the game for a long time. And so I want to say, on behalf of the viewers, thank you for that, AJ. Thank you for educating us and keeping us in tune with new innovative ways to continue to grow our portfolio. Once again, I do want to invite everybody to show us some love. Hit that like, hit that follow, hit that subscribe button. There's some awesome links in the chat to the daily webinar, to the free indicator. So head on over there, sign up. If you have any questions through any of these videos, any of the clips, feel free to throw it in the comments. Send us a DM, and someone will get back to you as soon as they can. Still haven't seen Dune, have you? Oh, man. How about some March Madness? Any March Madness this weekend?
No, I watched a movie. I have a secret. I really like this guy named Conor McGregor, who's this UFC fighter that took the UFC by storm. I watched a movie last night with Conor McGregor in it called Roadhouse with Jake Gyllenhaal, and Jake was like ripped, and it was kind of mindless, but it was also awesome because I like watching Conor McGregor, even in a Hollywood sense, beat people up.
I did see the trailer for that, but haven't seen it. I'll potentially add it to my list. But yeah,
I mean, there was a Patrick Swayze version of it when I was a kid, and I wasn't a kid. I was a teenager. I was about 17 years old when it came out, but I like this one better.
Interesting. All right. Well, you guys heard it there. AJ approves Roadhouse, is it? Roadhouse?
Yeah, Roadhouse. It was definitely though one of those movies that you just watch because it's got action. It didn't really affect me like in any other way besides entertaining me for the time I was watching it.
Well, that's AJ's recommendation. My recommendation, I'm going to stick with Dune 2.
Dune.
Fabulous. Looking forward to the third, and some college basketball this weekend. So if your team is playing, we wish you all the best. Otherwise, we'll catch you guys next week. Appreciate the love. AJ, thank you very much. Thank you guys for tuning in, and we'll catch you next week.
Signing out.
You for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.